Morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, October the 1st. Happy October, everyone. Quiet mixed trade here overnight. Corn prices right now are steady to about a penny lower. Wheat is still holding in there about 2 to 3 better. Soybean complex is mixed. Beans are down 6 to 7, while bean oil is down 50 to 60 points. Meal, the upside leader there, steady to about $1 better. A lot of data out yesterday. Call it big data Monday. We had quarterly stocks. September 1st, small grain production. We also had data from the EIA on biodiesel and renewable diesel production. And then, of course, our weekly crop progress and condition reports after the close. I'll start off in the SEP 1 stocks, pretty much in line with expectations with the exception of corn. Soybean stocks at 342 million bushels, slightly below expectations. Wheat stocks at 1.986 billion. That was slightly above expectations. Corn stocks, however, at 1.760 billion bushels. Well, that was up 400 million from a year ago. It was roughly 85 million bushels below trade expectations, depending on which survey you are looking at. So this did suggest a record amount of feed usage in Q4 of the 23-24 marketing year. On-farm stocks as of September 1st, we're at 780 million bushels. They fell almost 2.25 billion in the last quarter of the marketing year, which to me would suggest a record amount of farmers selling in this June through August timeframe. And to me also helps explain the price weakness and the latter half of August, clearing bin space ahead of this year's harvest. So to me right now, feed grains, in particular corn, I think have the best upside potential based on a building demand story and tightening stocks. All wheat production yesterday at 1.971 billion bushels. That was down 11 million bushels from August and pretty much in line with expectations. This due to lower winter wheat production. What I found interesting was the 500,000 acre increase in harvested acres, while yields did fall 1.5 bushels per acre to 51.7. EIA data yesterday showed biodiesel and renewable diesel capacity actually dropped nearly 300 million gallons in July. This is due to a recent newcomer to the renewable diesel industry, Vertex Energy. They did file for Chapter 11 last week, in which accounted for, or last month, which did account for the capacity drawdown. Combined production of biodiesel and renewable diesel dropped 1.3% in July to 458 million gallons, still the second highest monthly production figure ever, however. Bean oil usage did drop, however, 1.139 billion pounds. That was down 10% from June and just down over 10% from July of 23. However, it was pretty much in line with what we need to be at going forward to hit the USDA forecast of 13 billion pounds. So I look for no changes in next week's WASDE report. No shocks with crop conditions. Yesterday, ratings dropped 1% in corn to 64%. Unchanged in the beans at 65%. Corn harvest advanced only 7% to 21%. That was slightly below expectations. Bean harvest, that did advance to 26%. In line, maybe a little bit faster than expectations there, above year-ago and 5-year pace. Winter wheat plantings, they did reach 39%. That's ahead of the 36% from a year ago and the 5-year average of 38%. And after today's close, we'll also get monthly data on U.S. crush for soybeans and for corn used in the production of ethanol. This from the month of August. Help us fill in the data here for the next WASDE report a week from Friday on the 11th. So good weather here, the balance of the week for harvest in the U.S. Market's attention will shift back to watching central Brazil, where forecasts continue to suggest a return to beneficial rains here in some of the drier areas in week 2 of October, so enabling farmers to get out and plant beans in a more timely manner. Thanks for listening, everyone. Have a wonderful day.